This is Tom Aspray with the Viper Report Market Wrap video for the week ending August 16th. It seems like longer than 2 weeks ago when everyone hit the panic button and sold on the morning of August 5th. The selling was exacerbated by commentary and fears the week before that a recession was imminent or we were already in one, and then comments by a well-known economist that urged a 75 basis point cut by the Fed ahead of the open did not help. You have to be careful what you read, and it's been interesting for the past couple of years. It seems like the majority of analysts have been perpetually too bearish or too bearish on the right sector or the right group. This chart is from a Forbes article just showing the commentary and what was going on mainly in 2023, where I commented on a rally like 2011. This reversal to the upside was similar to what happened on October 4th of 2011. That was right after a downgrade of U.S. debt. Pretty nice kickoff. And then you can see in early 23, so this was in October of 22, Wall Street strategists were looking for almost a flat market in 2023, and of course we went from like 38.50 up to 47.63. There were a lot of signs here in June. The AD line broke out to a new all-time high in the S&P. That was projected that the S&P would also make a new high, which it did not too long ago. Also, we had a Zweig breadth thrust signal. You can Google that. You can see some articles written on it. And there was another one in November of 2023. After this sharp decline, it's really, I thought it'd be over right around in here, but we kept looking at the indicators and the AD lines. Broke its downtrend here on the 3rd, and that was kickoff for the latest rally. So why am I talking about that now? Well, just to show you that last week's action was equally bullish in the AD lines. Very strong action. You can see the rebound from below the Stark band here. That was one reason we thought it could be a panic low, because that characteristically happens, out of the blue. And as you can see below, the weekly as well as the daily AD lines were positive on that sell-off. I haven't found any corrections in the past 30 or 40 years where such a panic sell-off, was not confirmed, by the AD line analysis. S&P 500 AD line, sharp new high here, so it's continuing to progress a move above the high 4 or 5 weeks ago. The stocks only, remember the NYSE composite has stocks, ADRs, a bunch of different investment vehicles, if you will. And, it closed at a new high too last week. By the start of the year, all of these were very strong. They had broken out of trading ranges, as had the NYSE All AD line had broken out. And that told you that you should be buying stocks. That was not the conventional opinion at the start of 2024. Or frankly, was it at the start of 2023 as the NYSE AD lines were lagging, but the AD lines in the QQQ were much stronger. Another sign that this could have been a panic sell-off was the fact that as it occurred, this is, the AD line just dropped below its moving average on that Monday and quickly rebounded. Also interesting that, you have the CPC, which is the total put-call ratio, shot up close to 1.3. That meant there were 30% more puts purchased than calls. Never a good sign. And then, of course, the VIX soared to like 65 in the pre-open and had a spike peak. That was a sign, as well as the fact that we already were below the Stark bands that don't sell into this panic selling. The daily AD line is broken out to the upside, so this is consistent with another, push higher. A bit overbought. You can see that for the S&P, we hit the pivot at 551.14, closed above it on Thursday and Friday. The 50-day EMA in pink is at 544.60, 20-day 541.37, and then the 100-day at 530.07. So I'd not be surprised to see a pullback into this area in the next week. Of course, we're in a very seasonally weak period of time, particularly in September. So, we may be still have some more chopping action. I'll be watching the slope of the AD lines of their moving average. If they start to trend strongly like they did in, March, that would say the seasonals won't be right this year. You can see that the daily AD line on the New York All also is broken out of this trading range, so that is a bullish sign. The QQQs had a nice move to the upside. They hit the S2, dropped below it at 426 and change at the lows. Now we're bumping into the pivot at 476.25. It's also due for a rest with a 20-day EMA at 462.37. That's almost 9 points below where we closed on Friday. AD line has confirmed the action, so it new high here. That means that the Qs will eventually take out this high. Relative performance is trying to bottom out, but it could still, you want to see it, have a formation like this before you're confident that the QQQ is again leading the S&P. If that does occur, that would shake up most analysts who are not expecting that to happen. Once again, our sort of 90% indicator show there's pretty good buying on Thursday. Not so much on Friday. Only 29% of the S&P stocks were higher. Even worse in the S&P 1500, only 21%. And the Qs, not great either at 16. But these strong buying in here, as well as there, does suggest that this was an important turn. The NYSE advanced minus decline oscillator is shot up to plus 823. It typically peaks off in the plus 1200 area. We could hit that early in the week. No improvement in the high-low analysis. We had this spike on the 5th in the number of new lows on the NYSE, and we're still showing lower highs in the number of new highs. So I think this was sort of a one-off, but I'll be watching. Should the number of new lows creep back above 100, I will take note. If we get back above 200, it will bring my attention back on the high-low data. Small cap stocks bounced last week. The IJR, that's the core S&P small cap, was up 2.6%. Of course, the SPY was up 4 and the NASDAQ was up over 5. So they paled by comparison. Still below the pivot here at 118.80. And 80 line is back above its moving average, but not showing any impressive. And the volume here has been low, as noted here, been the on-balance volume. So, though I think that longer-term investors should probably have somewhere 5 to 8% in small caps at all times, because when they turn, they can really turn. I've had a position, something called the VBK, which is a Vanguard small cap growth since 2015. Overall, it's made money, but it's a wild ride. So not for the faint-hearted, but I don't move in and out of it. I just have a small holding. Interesting development in the growth value ratio, IWF, IWD, moved back above the 20-period moving average in an impressive fashion last week, suggesting that this could have just been a sharp pullback within, a longer-term uptrend. MACDs are negative, but they don't give you a lot of, this was positive, but then, it's back to below zero here. So we'll see what happens there. Sometimes at major turns, the MACDs do shed some light, but not a lot of help right here. Every issue of the ETF report, of course, we talk about the 60-minute analysis of the Qs. We've had some good success trading it. Oftentimes, you get some really nice bottoming formations. You can see that this is the 60-minute RS, a pattern of higher highs and higher lows until it cracked in here. We got out, and then we tried to venture back in and got sucked into this little down gap. But overall, it has improved. You can see it trying to move above this relative performance resistance here, and the OBV has improved slightly, still not equal to the heavy selling we saw at the start of the month. Of course, the weekly analysis of the Qs is still looking strong. Weekly AD line made a sharp new high, confirming a positive intermediate term trend, and the RS here has turned up from support, so looks potentially ready to move back above its moving average this week. So I would take this under consideration with new positions. Let's look now at the T&J's watch list. First, the ETF. Big improvement here. Now 72.3% are above their quarterly pivots. That was at 43.8. A bunch, 17, I think, exactly, new weekly buy signals. Of course, the catalyst for last week's powerful action was the fact that the PPI and the CPI came in as expected. No bad surprises with inflation below 3%. And then the retail sales, since everyone, the fixation of most negative analysts for the last month has been, consumers running out of money, they stop spending, that's going to, along with the rising unemployment, that's going to push us into a recession. And of course, the retail sales were very strong. Companies like Walmart, blew the roof off of their projections. So XRT was one of the weekly buy signals, as well as the gold stocks and also SPY. So a lot there. If you look at the growth gauge, 80% are now back above their quarterly pivots. Only 20% have weekly buy signals, but 90% have daily buy signals. So that's improved a lot. Value, 72.7% above the quarterly pivots. You can see XLB move back above its pivot. KBE, KRE both had daily DTS signals on Friday. In the leveraged ETFs, long is the place to be, they had a very sharp rebound from the August 5th lows. On to the sector report. The leaders for the past few weeks have been the utilities and the REITs. You can see that 100% are still positive. Quarterly pivot, weekly, and 3-day. We're starting to see some daily sells here, so I'll be watching. I think the utilities might be ready for a pullback here. You can see I have a couple of them that have 4-hour, so see if these, AEP, etc. moves into a daily sell and then a 3-day. Real estate, still at 91%, no change last week. It also has a little red there appealing. Of course, the biggest developments were in the tech. XLK went from, it was 8.7% positive 2 or 3 weeks ago. Now you can see it's 66. Lots of buys. Cisco, NVIDIA, AVGO, CRM, Adobe, Intuit. Lots of positive stuff happening here. So, I wonder if, AMD and some of these ones, Microsoft, etc., are going to get back into the 3-day. Financials also were whacked a lot more than I thought they were on the August 5th. They're also coming back. but you know, some of the charts. So we have Goldman Sachs gave a 3-day, American Express, Visa, Berkshire Hathaway, and JP Morgan. Healthcare still looks like a good place to be shopping, though not a lot of new signals here. Amgen and J&J, you know, are trying. UNH, United Healthcare, had a brief setback, but was not brief enough to set up a good buy entry. Consumer staples broke out to new all-time highs. You can see Walmart here, Costco, both very strong. And then, you know, industrials and materials are sort of languishing. You know, lots of red here in the 3 DTS. That would not be surprised to see them, you know, join the party here in the next week or two. One has to remember that at the end of August into early September is a pretty negative seasonal pattern here. So, you know, I would be sure you're careful on your buying. You know, buy near good support and don't chase the markets despite the bullish 80 readings. So energy, lots of red here, only 33% above the quarterly pivot, 41% negative or positive DTS, and 33 positive 3 DTS. So, you know, ExxonMobil, you know, and VLO, you know, are showing some strength, but that's about it. On to the themes report. Interesting, the NQ largest, AVGO, NVIDIA, and Apple all had new 3 DTS signals. Looking at the chart, you can see we got a daily buy signal on Tuesday, moved above the pivot here at 155.16, so that's now first good support. And if we switch to a 3-day, you know, we should be able to see that you know, it generated a 3-day with Friday's action. So, you know, looks like, you know, we came back into this good support a little below, really spiked down here on the 5th, but the volume, you know, stayed positive. Stochastic confirmer, you know, and Aspray insights were like were weakening ahead of that, so they're trying to turn back to positive. Crude oil has been all over the place. You can see really a mixed bag here for the oil and gas. Lots of red, 30% above the quarterly pivots, 40% weekly buys, and 30% 3 days. So we start to see some change in that, we might get interested. You know, much stronger action in the aerospace defense. You know, we've had a little bit of a pullback here. So LHX gave a daily sell. So if that doesn't morph into a 3-day, that might be something to look at. Boeing is still one of the weakest. And we'll finish with one of the casualty sectors, hotel and leisure, travel, you know, 0% 3-day, 0% weekly, and 16.7% above the quarterly pivots. So, you know, you can see Hilton, H, and IHG have daily positive signals here. So, you know, if we start to see those moving in to 3 days, then we'll look at some of the other laggers. People selling MGM out of their portfolios, etc., could be at the wrong time. Well, that's all I have for this week. You can email me at tom@viperreport if you want a free copy of the ETF report or to learn more about our services. As I mentioned last time, I'll be scheduling in September for classes in the fall. If you're interested in some one-on-one trading, I hope you'll join me. Have a great week.